Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming to you live from the CNBC TV 18 Motilal Oswal studios. Much more settled handover from Wall Street, not very much big. It is ongoing discussion between US and China, and that's the big story. Of course, apart from what's happening in Los Angeles, in America, where there's a National Guard on ground. Almost sounds like a episode from. What was it? House of Cards, guys. I don't know. It's just crazy stuff.
And not just the National Guard, now US Marine. 700 Marines also deployed.
Yeah.
And it's all happening.
Well, indeed. And, extremely fluid scenes out there. And in fact, you don't know what's going to happen next. So, just hope that normalcy, rationality returns all across the globe.
Absolutely. A lot of conflicts, a lot of things erupting, and really a bit of a state of upheaval. We've been sort of in that kind of phase now for the last at least a few months, if not more. Well, let's just take it from the top then, and we'll come back to this in a bit because, as of now, markets is this important story, and I think it's going to get a lot of press, but markets, are they paying attention yet? We'll find out. So, the big story, of course, is the US-China talks which were held in London, which were held in UK. Not very much by way of detail has come out. US equities, though, drifted higher. As they awaited news around specific details, etc., equities were slightly up. Nasdaq ended about 0.3% up. The 10-year yield was down 3 basis points. The dollar index was down about 0.13% as well. So, again, really no indication in that sense from the US close across rates, dollar or equities. As I said, US-China trade talk details were limited from yesterday. But, you had everybody from President Trump down essentially saying that it was very fruitful, very good. So, for example, Commerce Secretary Lutnick said trade talks were fruitful. Treasury Secretary Scott Bessent said it was a good meeting. And I think there's President Trump himself on the record kind of saying, well, it's not easy, but he's expecting good things. Bloomberg, there was a story which essentially it was very clear that, and this is what it said, the US is willing to remove restrictions on some tech exports in exchange for China easing limits on rare earth shipments. And this is the real thing. I think there was, after that Geneva handshake deal between US and China, I think there was some misunderstanding about what China is expected to do or willing to do as far as rare earth is concerned. And I think those restrictions those restrictions which were imposed in April were not eased. And it's kind of led to this latest flare-up. But of course, the question is, what many are asking is, who can afford to wait more? Can China afford to wait more without the chip technology? Can US afford to wait more without rare earth, which is used in everything from automobiles to defense to renewables, etc., etc.? So I think it's a bit of a mini test, right? Trump and the top Trump team have said for a long time that what we're trying to do, America first, will entail short-term pain. But is the electorate prepared for these disruptions? I think in that sense, it's a bit of a mini test which is going to be closely watched. So talks continue today as well. And I think we'll figure out if there is any detail which starts to come through. A breakthrough will be significantly positive as far as markets are concerned. I also on the fisc in the US Treasury will sell about $58 billion worth of 3-year notes today. So it's an auction. US budget development should also be watched closely. It's got to sort of go through the motions, get passed before it becomes a act. If it's solidified. Oil prices, they were up another 1%, 67 plus on oil is what we finally had. Now, to circle and tie in the levels here, so Nifty momentum continued yesterday, although we spent bulk of the day just under the upper end of the range, which is 25,116. Only twice, around 11 and 12:30, and of course the opening, we got above those levels, but otherwise spent the entire day under that level. That should, I guess, get taken out. But 25,116 is the upper end of the range we've been waiting for the market to take out. Immediate resistance after that is 24,310, which is nothing but the 78.6% retracement of the entire decline that the Nifty has seen. And support comes in at the 40-hourly exponential average, which is 24,872. Again, very near-term levels, just under 1% on both sides. The Bank Nifty inched higher, and of course, the momentum there as well. Weekly upper Bollinger Band for the Nifty Bank, which should act as a bit of a resistance, is 58,183. Support comes in at 55,508. You know, it's a question I asked yesterday whether we will see a repeat of what back then FMCG stocks saw after the tax cut announcements, rallied, lever, etc., rallied sharply and then fizzled out over the next 10 days after the budget tax cuts. Will we see something similar after last Friday's RBI cut announcement and some of the big moves? We've had 2 days of decent moves as far as financials are concerned. And maybe today, over the next 2 days, I think, we'll find out in terms of how much fuel is there in the tank for markets to bid these names higher, especially in the financial space. GIFT Nifty, quick check in terms of what we are opening up at. It's a 60-point uptick on the GIFT Nifty. So comfortably, like yesterday, above the upper end of the range. And then maybe further to go. Surabhi.
Yeah, absolutely. I mean, not too much going on. It's just global markets have been inching higher slowly but surely. And whatever you throw at them, issues around trade, issues around politics in the US, come what may, markets have been marching higher and that continues. In fact, they're doing better now because there's some hope that there could be some breakthrough in this US-China trade deal. So that's what's keeping the excitement alive. By the way, yesterday we got the Chinese import-export data. While overall for China in May, exports were still up 4.5%. There's specifically their exports to the US, obviously for obvious reasons, have been taking a hit. In fact, they're down almost 34.5%. These are China exports to the US. So let's watch for the developments around this space. Most markets are higher. I mean, if you're looking at mainland China right now, the Hong Kong market, or you're looking at Japan, all the indices are tracking a gain of 0.25% to 0.5%, if not more, depending on which one you're looking at. And the South Korean market continues to charge higher. Consecutive gains coming in. Even the Kospi is up about another 0.5% today. We'll watch for, of course, what happens to crude oil because it's building on that move above 67. Technical chartists are saying there's a bit of a technical breakout as well. Crude has been in a range after falling, post-Liberation Day, and it's getting close to the top of that range now. So whether it breaks out on the upside, we have to see. But look at that 0.5% gain coming in above $67 to the barrel that's on Brent. US politics continues to be in focus as well. It doesn't have an immediate market bearing, but markets are, of course, watching and taking note. I mean, is it leading to more instability? The state of California has now sued the US, Trump administration for the use of the National Guard, for the use of troops on the streets in LA to quell the protests. And let's see how that plays out. And in addition to the initial call for the National Guard, there were 700 Marines deployed yesterday. Now, President Trump is saying that there'll be 2,000 additional National Guard troops that will be pressed into service. So things are pretty dire from that standpoint. For us here, the positive consolidation has continued and the market is right at the top of the range. The Nifty yesterday took several attempts to cross the previous high, which is 25,116, but it couldn't do that decisively. Could today be that day because Qs are still positive. So let's watch for that. Flows are very supportive, no problems there whatsoever. FII has bought cash market equities worth almost 2,000 crores yesterday. Domestic institutions were also buyers on, about 3,500 crores. The flows are not a problem. And with the kind of, small opening pop, we'll again be breaking above the recent 17-day trading range. Let's see if we can sustain there today or not. Lots of interesting stock action. There's plenty of paper supply that's hitting the market, whether it's blocks or OFS, rights issues, etc. Premier Energies is going to be in focus because sources have been telling us that one of the key funds in the company, the South Asia Growth Fund 3, that could be selling over 5% equity via block. Capri Global, and this is Nimesh was telling you this on D Street Chatter on Closing Bell yesterday, got confirmed. Indeed, there is a QIP coming. They're looking to raise about 2,000 crores as well. Nigel will talk more about Protean. There's finally some good news coming in for Protean as well. And I'll also place the defense pack on the radar again. There are lots of reports doing the rounds that the Defense Acquisition Council could be looking at procurement of surface-to-air missiles, the quick reaction surface-to-air missiles. And the value of the contracts could be 30,000 crores. So Bharat Dynamics in particular, which is a key systems administrator, integrator. That would be in focus, and even a BEL. So watch for the defense pack if it gets excited on some of these prospects as well. So Nigel, looks like we're set for a positive start today.
Well, that's right. But I think the headline index will be in a bit of a range, and the real action will continue in the broader markets. Maybe we console a little bit, but there'll be select stocks that will outperform, and that's what we have been seeing. Even in yesterday's trading session, the real party was in the mid as well as the small cap index, which outperformed what the Nifty did. Even the Nifty Next 50, that as well did pretty well. So the broader market traction will continue. However, enjoy the party, but just take on board that the margin funding book actually has moved up. Remember, when the markets got very, very buoyant, it went closer to around 90,000 crores. Then when the markets, went into a bit of a tizzy, we saw a lot of those margin calls got triggered, and that's why that book had come down to around 65,000 to around 70,000. As of the last count that's given on the NSE, it's uploaded on the NSE, it comes with a bit of a lag. It's at around 81,000 crores approximately. So that margin trading book actually has moved up a little bit. So, it appears that there is some leverage that's creeping back into the system. For the time being, it looks okay, but just keep an eye out on this number as well. Moving to what happened on the headline index yesterday, there was a bit of a short covering bounce that played out. Indices ended higher and the open interest was lower. And what did the FIs do? Not too much on index futures, though they continue to remain net short with close to around 80% of their positions on the short side with regard to the FIs in yesterday's trading session. And we should get that graph up for you on the screen as well. 80% positions still on the short side. Moving to the options data then, there appears a bit of a strategy playing out because in yesterday's trading session as well, the 25,100 call, 25,100 put, both of them were fairly active. You club the premium, it's roughly around 300 rupees. Now that's telling me in the near term, just in the near term, we could be in the 600-point range, which means on the upside, the 25,400 mark becomes a bit of a resistance zone. On the downside, the 24,800 becomes your reference zone. And that's where the 20 DMA as well ballpark comes in at. The near-term resistance, though, will be at around 25,250. So for the near term, 25,250 to around 25,400, that'll be a bit of a band in terms of a resistance zone. The Nifty Bank, that'll have to lead the way. Remember, the RBI governor, has given them that bit of a booster shot with regard to the CRR cut. And on a day-to-day basis, gradually you're seeing it's making, higher highs. You'll want to see this trend continue because the Nifty Bank will require a bit of a push to get decisively past that 57,100 odd mark. I'm looking at two stocks. Both of them have got badly hit. One is Protein eGovern. They have won a 100 crore order coming in, from Bima Sugam. So I'll keep an eye out on this stock. Remember, it got hit when it didn't qualify for the PAN 2.0 contract. But there is some good news that's coming in there. And it's a stock that's down 30%, I think, in the last month or so. So that one is on my radar. And the other one is Jindal SAW. Remember, crude oil prices have perked up a little bit. After a while, they've gone ahead and announced a capex in the Middle East. This stock as well is down 30% in the last 6 months. Putting on some capex, that'll give you some visibility with regard to growth. Stock trades at around 5 times EV upon EBITDA. And as I said, it's been a big underperformer. Growth was the problem, 30% down. It was high yesterday, but it could be one of the stocks of the day today.
All right, keep an eye. Jindal SAW in focus there. Well, Nigel, thanks very much for that. Lynn.